Okay, let's do the very quick classification together. You see A through J, these different activities. If I were asking you to categorize these into operating, investing, financing, these three types, which one would you call A? A would be in operating activities because accounts payable is a short-term liability account, right? Okay, what about B? Payment of cash dividends. Guess again. What is dividend? Dividend is related to, I should say, what is dividend related to? Why is company giving out dividend? Why is company? They issue stock before, and they are rewarding shareholders. So what is stock? A type of financing activity. Okay, so cash dividends, the payments there, anything related to stock, buying back the stock, issuing the stock, long-term liability and equity all goes into financing activities. Okay, dividends is a way to reward shareholders. So very good, yes, it's part of financing activities. Okay, what about C? Decrease in accrued liabilities. Very good. It's operating activities. What about D? D, financing activities. Good. Gain on sale of building. This, when you see this on statement of cash flows, these two are the tricky ones, E and F. E and F, gains and losses, is part of income statement, which is why it would be listed here in operating activities. However, we would usually exclude. The purpose listing it there is we're taking it off from net income. So we would minus gain plus sale. Later on, the total amount will be reported here. Okay, but in terms of listing it, it's still part of operating activities because those are income statement categories. The gains and losses you will see in multi-step income statement in the very last section, the other revenue, other expenses. So anything that you see on income statement is still part of operating activities. Okay, depreciation expense. Operating because it's part of income statement. Increase in inventory. What is inventory? Inventory is a short-term or long-term? Is inventory long-term? That company purchase it in, you sell it 10 years later? Okay, where do you see inventory in the balance sheet? Chapter 5 and 6. I'll give it back to me. Chapter 5 and 6, inventory. Inventory is part of a current asset. Right, for merchandiser company, inventory, when we purchase it in, it's very important to sell it to your target customer as soon as possible. Remember, inventory turnover rate. We always want companies to purchase in from inventory from their supplier and immediately or as soon as possible resell it to your customer to gain the gross profit in between. Remember? So inventory is always a current asset account because we want to sell it immediately within a season or within an accounting cycle. So any increase, the money that you spend on purchasing inventory will be reported under operating activities. These are part of the daily business activities, day-to-day transactions. So anything listed on operating activities is actually the frequent transactions that you see on a daily basis. Okay, accounts receivables decrease. Operating accounts receivables is part of current asset. It's listed very close to inventory. Purchase of equipment, investing. This is a long-term asset activity. Okay, any questions on this? Categorization of this chapter is very important. Which activity belongs to which section? This is important to know before you do any calculation. You have to know where it's reported first, otherwise you would get the section's cash flow wrong. Okay, so categorization is very important in this exercise here.